What market trends can we expect for 2016? Joining us now is trends forecaster and publisher of the Trends Journal, Gerald Celente. Thank you so much for joining us in studio, and Happy New Year.
Happy New Year. Felice Anno Nuovo.
Thank you, thank you. Well, let's look at the markets. Do you come bearing good news? Commodities were quite under pressure in 2015. Will it be more of the same in 2016?
Most commodities, yes. There's a deflationary cycle going on. You look at the numbers, I mean, why is oil going down? Why is uranium, zinc, nickel, copper, iron ore? It's supply and demand. And there's a global recession. That's one of our top trends for 2016. So there's too much supply and not enough demand. So when you look at the last year, for example, only one commodity price went up, and that was cotton. It only went up about 3.5%. But when you look at the Bloomberg index, you're looking at commodity prices at 1999 levels overall. So most commodities that are for industrial use are going to continue to decline. There's too much supply and not enough demand.
Well, let's take a closer look at gold and silver. Gold down 10% from last year, silver down 12%. The question is, do you think gold could go below 1,000 in 2016, and what would that do to silver?
Our forecast was gold wouldn't go below 1,150. That was our bottom. We believe gold is at the bottom. And we've been saying this since it started to unravel in late 2011. It cost that much to pull it out. When you're looking at the other commodities, that's a supply and demand issue. So let's go back to Happy New Year. Look how the new year began. The Dow was down, what, almost 470 points. It recovered. You saw the Shanghai, they had to close the market when it went down 7%. Gold went up. As everything is going down in the equity ends, gold is either going up or staying stable. It is the ultimate safe haven commodity.
Okay, so you like gold.
I believe in gold.
Okay. Let's talk the Fed. What do you think will happen this year? Will we see more tightening, or will maybe they have to go back to easing here?
It's hard to tell because of what's going on with the markets, but as you keep looking at the equity markets, there's no reason for them to go up. It was a phony bubble that was pumped up with record low interest rates and quantitative easing. Mergers and acquisition activity last year at an all-time record. Tell you what, I'll borrow money for free and I'll buy up a lot of companies. And the other one was stock buybacks. That's ended now. So you're going to, when the equity markets decline, the Fed is going to react. That's the only way they react. They don't react from the person on the street not making enough money to pay the rent to put the kid to school. So if the markets continue to decline as they are, I believe the Fed will not raise interest rates and probably come up with another scheme undreamed of, because who in the history of the world, part one or part two, ever heard of quantitative easing, zero interest rate policy, or over there in Europe, negative interest rates? So they'll make up something.
All right, 2016 could be a big year with the U.S. presidential election. What do you think could be a big surprise we could see?
A third party. People are ready for a third party. What Donald Trump has done is he showed what a bunch of clowns it is. You see, he's dealt with these politicians in business levels and knows what little boys they are. That's why he could run over them. But he doesn't have a lot of substance. He just talks sound bites. You know, I'm going to defeat ISIS. I'm going to cut off their heads. Yeah, okay, great. How? You know, what are you going to do? So what I'm saying is the people are disgusted with the two-party system. He's shaking it up. It's a great opportunity for a third party. And by the way, that's how I began making my name in one of my books, Trend Tracking. Back in 1988, I'd forecast a new third party, and I mentioned Ross Perot as the type of person. America's ready for a third party. Look what's going on over there in Italy with the five-star movement. It's gaining strength again. What happened over there in Spain with the Podemos party? It's time.
So we might see Gerald for president. No. Finally, Gerald, you like gold, but what other investments are you liking? What are you eyeing?
I still like real estate, and I don't give investment advice, just for myself. Yep. But again, not real estate that's really peaked, but real estate and things that you love, things that you believe that you want to retire into. or become part of. Also, the biggest trend out there, one of the biggest ones, in looking at it, opportunities, is artful aging. The baby boomers are hitting 70. That's right, that huge wave, and they don't want to end up as inmates in nursing homes. Any products and services along the lines of whole health healing, longevity, all of those kind of products to sustain the baby boomers. And also, they've reached a level in their lives where they've had a lot of knowledge, and now they could put it into maybe a more positive way than they did before, because a lot of people take jobs because, well, it's security, and they hate their jobs. Now they're reaching the age where they could become themselves.
Gerald, thank you so much for stopping by. It's always a pleasure speaking with you.
And thank you for having me.
And thanks for watching this edition of Kitco's Gold Report. We'll have more for you tomorrow.